The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started.
Hey traders, mindset reset. It's Tuesday, day 2 on the front side of week 2 in a new month. Some textbook playbook opportunities on the front side of the week already, right in the Asian session. Monday, day 1, we had London and Asia session traders be able to capture some very explosive moves coming out of the first week of the new month after non-farm payrolls. Answer a couple questions today specific to some traders asked some questions. I want to talk about the mindset of the trader, but I also want to talk about understanding the templates. So we'll start with that. Number 1, understanding the templates. Now, there's been a lot of confusion, a lot of misinformation, and I repeat that because traders are focusing on the minutia, the little movements of candles, asking me, is it a continuation at the high? Is it a reversal at the high? If I'm only trading gold, what should I look for? Is there trades in the gap time? I need you to understand one thing before we go any further. I've gone over this in technical videos. I'm going to be doing another technical video. I've just had a busy couple of days. High of day, low of day, high of week, low of week, high of month, low of month levels. Go back to the playbook. Do you understand that day to day, Monday, Wednesday, Friday is a template? In the playbook, we talk about 3 days of breakout traders. We talk about first red day. We talk about first green day, the day 0 template. Those are weekly templates. So misinformation about cycles, restarting day counts, and everything else is nothing but misinformation, complete confusion. I need you to understand those are templates. First red day is a template. If it happens on the closing range of the week on a Friday, guess what we're looking for into the new week? Guess what? Monday traders are looking for the first red day trade, but it's the opening range of a new week. If we are going to see a potential first red day setup, what does Paul Tudor Jones tell us? If a market is giving us an indication of a direction in a range expansion of where it may be headed, pay particular attention to that. So in the opening range, we're looking for a daily level to be broken. We had 3 days of breakout traders in the market and a first red day signal. It's a signal. How does price behave? Now we have a 3-day template, Friday, Monday, Tuesday. Now traders are asking me questions about 3-day cycles. Nowhere in the playbook do I talk about 3-day cycles. I talk about 3-day setups. 3-day setups have to do with peak formations forming at a weekly level, and then a daily level being broken on the opposite side, which restarts a day count in a 3-day potential setup. Now think about that. It's a new week and a new timing cycle. If we have a peak formation at a weekly level, we're either going to be getting a pump and dump continuation in line with that peak formation from the previous week, or a dump and pump continuation in line with that previous week, or we're looking at a week now that could be potentially heading in a different direction. Week 1, week 2. We could get week 1, week 2 expanding the range. First green day signals, first red day signals. We can get a week that's counter trending a monthly, right? Week 1, week 2, week 3 might give us 3 days of breakout traders counter trending that higher time frame for an all-in continuation trade. To answer a question regarding that, traders asked, can you have a market give 3 days of breakouts without closing in breakout? Absolutely. We showed an example of that on gold last week. A market that had broken out short day 1, day 2, day 3, Thursday back into a first red day. Asia blew off and took out the low of the week. These are all templates that show up weekly, which is why I repeat to traders, I'm looking for the template. Which instrument is setting up? Now, if I can't find a textbook 5-star A+ setup in my session front side, I might have an inside day signal, a signal day that can offer me a potential opportunity. I may have a 3-session setup, which still is a pump and dump in line with a higher time frame, or a dump and pump opportunity in line with a higher time frame. Meaning, I am not looking to counter trend markets driven by higher time frame traders. Why is that? Well, in most cases, there's no follow through. You're looking at a nail and bail opportunity, which means we reduce size in those situations. When we're trading in line with higher time frames, or we're at the extremes with an all-in opportunity, high of month, low of month, reversal situations, or closing range of the week. So the reason why I emphasize this is that everybody studies on the weekend. And then as soon as Monday morning opens up, they go back to trying to grab the high. If you're doing that on the front side, if you're doing that on the front side of a week, and then you say it didn't work, oh, it didn't work. You're on the front side of the week. Higher highs and higher lows is not a first red day. It is not 3 days of breakout traders to take the trade, counter trend front side of the week. Day 1, day 2, day 3. Midpoint range of the week. How is price behaving? Oh, I don't have a template, or I have a first green day. Okay, you have a first green day. First green day on a Tuesday or a Wednesday. Okay, it may dip down on a Thursday or dip down on a Friday, but that's our low extreme. How does price behave in the template? In the playbook specifically, I talk about traders don't get it the following day right away, and they walk away and they forget about it, and it's the second day after the trade. It could be Friday, the closing range of the week. I put that extra cheat sheet in the course section regarding signal days. Wednesday. That's the basic model. That's the basic template. Day 1, day 2, day 3, signal day. Now we can have inside days. We don't change the day count. We're in a template. But you can have an inside day trapping traders into a new week that gives us a first red day or a first green day signal into the new week, new timing cycle. It doesn't mean the template didn't play out. It didn't play out when you wanted it to play out. So step back and let these setups present. And when they do present, understand how price should behave. So if you forget about it and you miss the opportunity later, and then people say, well, how did you get that? Well, because they followed it through. It's a new month, new timing cycle. Now, sometimes we get great opportunities that collapse or reverse at an extreme, and it may take 2 or 3 days, or it may take into the next week to actually give you the perfect setup in your session. So Asia might get it on a Friday. London might get it on a Tuesday. And Wednesday might get it in the US session. Because now we might be in a market that's trending. Week 1 or week 2 might have put in the extreme, and now we're trending back in line with whatever was initially driving that move. Or now we've got a new direction for the rest of that month or into that third week. So understand there's a larger time frame here. It's not about just, I only trade gold. What should I do? I don't know. I only look for setups. And if gold has the setup, there's certain setups that I look for specifically on the metals. Same thing with the indexes. Now we have CPI tomorrow, Wednesday CPI. So it's not unusual to see maybe a market move in the earlier sessions, or maybe move just prior to the session, and then it traps traders in the main session until later in the day or into the new day. Paul Tudor Jones, think of your entry point as last night's close. We see people trying to counter trend or trying to catch big moves and during the session that didn't go anywhere. And then the next day in the Asian or London session, we see an explosive move that clears out all the low-hanging fruit that gets trapped in the US window. Okay, so understand templates and how they set up, how they'll present. Markets that close and breakout, inside days, first red day signals, first green day signals, 3 days of breakout traders in the markets, outside days. Typically with an outside day, will be followed through with an inside day. So we can't miss that signal usually if we're following even a basket of 5 or 6 instruments. Now, often with the major currency pairs, if I get a signal day, I will peruse the cross rate pairs. Now, Aussie dollar, New Zealand dollar, Canadian dollar, we get rate announcements, as do all the other instruments. Those are high impact for those instruments. So often we can see a front side explosive move or a momentum news catalyst opportunity. Or even the day before, as we saw this week, we saw explosive moves in London on the Aussie dollar, New Zealand dollar for the reversal after the RBA announcement today and taking out the low of the month again, the follow through. Now, most importantly, though, I want to emphasize the concept of setups, because then if you really cross that divide in your mind, I'm looking for specific setups based on this criteria, whether, okay, I'm looking for inside day setups. How should price behave on the inside day? Okay. How should it behave? Are you looking for a reversal, or is this not a reversal situation? We talked specifically about that. There's a playlist on inside days. Now, the reason why that's important is that if you're going there every day looking for markets that have broken levels and just which one is my setup, which setup are you looking for? Now, here's a great example. I'm going to go through this in a technical video. I'm trying to dispel all the confusion. This is why I talk about Steven all the time. My friend Steven trades reversals after markets have broken out and not until after 10 a.m. Coils, when markets coil sideways, they're preparing for an explosive move. Now, the next part is in terms of the mindset of the trader. So that's the big challenge for traders, is where is the easy money made? Now, I hear, honestly, there's so much confusion going on with some people. Other people have crystallized this. Like today, Khaled, marvelous. First red day trade. Like they just know exactly what they're looking for. Steven knows exactly what he's looking for. Trader K knows exactly what he's looking for. So there's certain situations you just rinse your hands of it and you go, no, no, no. I'm not worried about a market because it moves. I'm looking for the ones that offer the setup where it's easy to make money. And I know CPI's tomorrow, so if I don't find that, I don't go chasing stuff, because I know on the backside of the week, 90% of the historical data templates that I have gone through, it's got nothing to do with cycles, sweeps, hunts, gaps, soups, tea leaves, whatever. The same templates show up over and over and over again. That's why I emphasized to one gentleman this morning, those are your templates. First red day templates, first green day templates. There's no guesswork. 3 days of breakout traders is a template. Day 0 is a template, a weekly template. It might build over from a Thursday, Friday into a Monday, Tuesday. Why and when? Because I talked about this, the beginnings and the ends of months, new timing cycles. You have to stop and think, where is the easy money made? I'm not trying to catch the move. I'm not trying to grab some pips. Where is the easy money made that's driven by higher time frames? And as Creo said today, he's sitting on his hands today waiting for the ACB templates. I commend him on that. There's no point in getting into a science project just to catch a trade. And if you're sitting there trying to figure out how to trade this market, I can't help you. I'm not great at trading markets. I'm good at specific rinse and repeat patterns that show up again and again and again where I know it's easy to make money. I don't care about anything else. I don't care about trying to, I missed that. I knew it was going to go there. Who cares? Coiled markets, when they go, are going to the close. And if it goes in London, then I've missed it. Maybe there's low-hanging fruit. I won't counter-trend it. That's the big thing to understand. Don't counter-trend the market if it's an ACB day, because it's going to go to the close. Shape your mind around where you can't lose. Not about, let's show us your losers. Don't trade losing 50-50 losing trades. Stop doing that. Trade setups that build your trading business and make you a lot of money. If you're sitting there reading the market every day, that is not a setup. That is not a setup. Not in my book. It's not a setup. I don't care what anybody else says. Rinse and repeat. If you had an algorithm, does the algorithm decide every day? No, it has criteria that when the criteria is fulfilled, it automatically executes. It automatically executes. It's rinse and repeat. Like I said about my friend Steven, I can message Steven right now, and I guarantee as soon as he gets the message, within 5 minutes of him reading that message, he'll send me a dozen screenshots of a dozen different instruments with the identical same setup. Identical same setup that makes him money. And then he's got his 5-star scalables, which we know ACB monkey hammers are, we joked about month money. Now that's year money. That's your money. When you get the all-in monkey hammer and it's set up properly, that's your money. So you don't have to trade all the time, and you don't have to take a lot of trades. If you're taking a lot of trades, wouldn't it be better to take one or two that you can size into that are going to make you a lot more money, less management, zero stress, zero thinking, zero emotion, and sit on your hands in between? And I know that once they start moving and the markets are moving, we're convinced that we missed something, or I should have been in that move. But if you really narrow down on the smaller time frames, you'll identify that perhaps those opportunities weren't in your window, or if they presented at an opportune time in a day or two earlier and you weren't part of that move, that doesn't mean that you've missed anything, because now the backside could be setting up for your session and your timing window, as we saw that first week, to blow through where that move started from in the first place, whether it's in the long direction or the short direction. Just my 2 cents. You make a lot of money on the days and the setups where it's easy to make a lot of money on. The rest in between is just, as Steven jokes, to feed the beast. And that's entirely up to you if you even choose to feed the beast. Your trading business is built on scalable, rinse and repeat, parabolic opportunities. And in between, if you take other positions with smaller risk for hold or swing trades, it's based on those higher time frame signals, driven by higher time frames. An inside day is an inside day. Somebody asked me yesterday, yeah, but it depends on which time frame you're analyzing the markets with. No, it doesn't. Okay, you got monthly levels, you've got weekly levels, you've got daily levels. Signal days are on the longer time frames. I don't care if you're on a 1 minute, 5 minute, 15 minute, hourly, 4 hour. You're still inside of those time frame levels. Timings, levels, behavior of price, mindset, behavior of the trader. Setups, execute, rinse and repeat, lock in the money, get off the screen. Just stick with simple rinse and repeat opportunities. Tomorrow's CPI. Do not get into any science projects, and do not do any damage, psychological, financial, or other. Have a great day, traders, and may the markets go with you.